much, Amit. I'm really pleased to be here, and I thank everybody who is tuned in today for this presentation. So, as Amit introduced me, I am Audrey. I manage data and insights on financial health for the United Nations Capital Development Fund. Um, we are a UN agency with a mandate for financial inclusion and financial health for least developed countries. And I will give a more detailed introduction as we proceed. But today I am going to present on the financial health of gig workers. And these results that I'm going to present are from Malaysia and China. So let's get started. Today's agenda is as follows. I will tell you a little bit about UNCDF, then introduce you to the research. I will share findings from the research, and then we'll end with where we can go from here. So about the United Nations Capital Development Fund. So we're a UN agency. We operate in 47 least developed countries. At the moment, we are present in 39 developing countries. Our main objective is to make public and private finance accessible and affordable for low-income people. And our vision is to develop an inclusive digital economy that leaves no one behind. So we operate by means of work streams and instruments. Our work streams are these four categories that you see on my screen. We want to empower customers. We want to enable an open digital payment ecosystem. We want to foster inclusive innovation. And we want to create enabling policy and regulations. We believe these are the four ingredients that are necessary for customers at the last mile to access services that will eventually make them financially healthy. We use several instruments, some of which I have listed here. We offer technical advice and training. We engage stakeholders. We have a huge focus on customer centricity. Of course, we use data and research, and I'm representing that team today. And we de-risk financial instruments through a provision of grants and technical assistance. We have a few focus segments. I've listed 5 here, but we have many more. Women, youth, micro, small and medium enterprises, refugees, and migrants. We also focus on informal workers, a subset of which is gig workers, and that is the segment that I will be focusing on today. So let's move forward. Let me tell you a little bit about the research. So this research was conducted in Malaysia and China. And why Malaysia and China? UNCDF recently instituted a program called the I3 program, funded by the MetLife Foundation in Malaysia and China. So we've been in Malaysia and China since 2018. And these are not least developed countries by any means. But of late, we have forayed into middle-income countries and emerging countries such as India, because we recognize that significant parts of the population in these countries are still vulnerable and will benefit from a range of financial services. That's one. And two, these economies have a robust innovation environment where experiments can be conducted. And UNCDF works very closely with the private sector to conduct these experiments to see what works and what doesn't. In Malaysia and China, we focus on different segments, one of which is gig workers. So our research sought to unpack the financial lives and aspirations of workers in the gig economy. And we asked 4 broad research questions. Of course, within these questions, there were many other sub-questions, but these are sort of the broad research objectives. So the first one is, why do workers choose the gig economy, right? Why do they choose to participate, and what are their experiences? Second, what is their financial health status? And what are some of the key financial behaviors they demonstrate? Third, we wanted to understand how they navigate their finances in terms of products and services, and what are the barriers they face there. And last, because we conducted some of this research as soon as COVID-19 surfaced, we included questions related to COVID-19 impacts. So if you look at the timeline here, we started with, we had a total of 5 players. We started with GoGet before March 2020, so right before the COVID-19 period, Fast Jobs sometime in May, and Grab and Foodpanda. Now, these are all gig platforms that facilitate some sort of gig or temporary work. Grab, most of you might be familiar, is the version of Uber for Southeast Asia. Foodpanda facilitates food delivery. Fast Jobs facilitates both long-term as well as short-term employment. So they have this platform where they bring together employers that are looking to hire and individuals looking for jobs. And GoGet is similar to Fast Jobs, but it only facilitates short-term employment. We also, and I apologize, it's not on the slide, we also had this platform from China called Lionbridge. And Lionbridge was one of the early participants in this research. So that happened back in January. And Lionbridge is a platform that facilitates gig work for truck drivers. It's a slightly different business model, and I will get to the details as we go on. All right. So let me start with an introduction into the gig economy. Now, the gig economy does not have a very rigid definition, but it has various manifestations, right? I'm sure most of you might have heard of some of these terms that you see on my screen, such as platform economy, collaborative economy, on-demand economy. A lot of these terms are used synonymously with the gig economy, and rightfully so, because they represent features that the gig economy embodies, but none of them fully represent the gig economy. And I don't think we have enough time to go into the details, but what I will say is that there are 3 characteristics that we have pinned down to define the gig economy for the purposes of our research. So the first one is temporary work or gigs. Now, this work is sometimes over in a matter of minutes, but it could also take longer. But really, the underlying notion there is that this gig is temporary. Second, there is no contractual relationship between the gig worker and the platform that the gig worker is using to find work. And third, we focused on tech platforms or the tech-driven gig economy, but the gig economy can very much exist outside of tech platforms as well. But our study did not include those types of gig workers. But I would like to say at the outset that even though our study focused on the on-demand tech-driven gig economy, we are very much cognizant of the fact that informal workers that are on call or temporary contracts will face some of the same struggles, and their financial lives could be very similar to gig workers, as we will see in due course. So how big is the gig economy, right? So McKinsey did this research in 2016 where they tried to estimate the size of the gig economy. And according to their report or their estimates, by 2025, the gig economy is expected to contribute a whopping $2.7 trillion to the global economy. And that's sizable. And the gig economy is growing, not just in Malaysia and China, but in many parts of the world, including India. This is what the gig economy looks like in the Malaysian context. So Malaysia has a labor force of 15 million people, of which 4 million are gig or independent workers. Now, this is an ILO/World Bank source. And we don't necessarily say gig workers because it also includes workers that are not necessarily part of the on-demand tech-driven gig economy. Therefore, we have the word independent there. Regardless, this workforce represents people that are undertaking work of a temporary nature and don't necessarily have long-term contracts. So that is something to keep in mind. The China context, a labor force of 781 million, of which 47% is self-employed. If you notice, both these countries have excellent smartphone penetration and internet connectivity. China slightly less so in terms of both, but regardless, it's pretty impressive when you compare it to some other emerging economies. Before we dive into research findings, I would like to introduce the concept of financial health. I've mentioned it quite a few times. And although it is an intuitive concept, a lot of us probably in the audience can define it. But I would like to introduce the three different dimensions of financial health that we have pinned down based on empirical work done on this subject in different parts of the world. So financial health for us comprises three dimensions. The first is financial security. Now, this is a very fundamental dimension because it is the ability to meet ongoing daily commitments now and in the future, as well as under adverse circumstances. So when there is a hostile situation or there is a shock to your system, are you still able to meet ongoing commitments? That shock could be something that we're living with right now, which is the pandemic. In terms of future commitments, what we're really talking about is a sense of preparedness for your expected future, such as your retirement, for example. Another thing I would like to note, the concept of being able to meet your commitments under adverse circumstances, we also call financial resilience. And this is important because I will be mentioning this as we go along. Financial control is the second dimension. This is a bit subjective. What this means is the feeling of control over one's finances. And this represents a sense of self-efficacy, which is confidence in your own self and your financial situation now, as well as looking to the future. Financial freedom is a step up from financial security. So you really need to be financially secure first in order to be financially free. But that does not necessarily mean that if you're financially secure, you're financially free also, because you could be someone who could meet daily commitments, but not necessarily enjoy life on your own terms. And that is what financial freedom really is. It's the ability to meet your financial goals and enjoy life on your terms. Okay, so before I delve into findings, I thought I would show you a quote by a gig worker that we interviewed and what he had to say about what financial health meant to him. And like I said, we all could come up with definitions of financial health. And this guy had his own. And what he says is that financial health is about getting to do what you want without worrying about where the money is going to come from. It is about financial independence and no obligations to anyone. So it sounds like he touches on all our dimensions one way or another. Right, so we can move into research findings now. So I've consolidated these findings because, like I mentioned, we did different surveys with these platforms. We couldn't aggregate all of them because Lionbridge, for example, from China is entirely different from the platforms in Malaysia. So what you see here is weighted analysis from the Grab and Foodpanda sample because they are similar. They represent the ride-hailing and food delivery industry. Grab also does food delivery, by the way. And the sample size is 15,097. And the research methodology that we followed here is non-probability sampling, which means that we basically floated an online survey on Grab and Foodpanda's platform, and we promoted the survey so that we could get responses. So it was really like voluntary sampling. We would therefore caution against, treating some of these findings as causalities. although we have found some statistically significant predictors, and we have weighted the analysis so it's pretty representative, but we do caution against taking them literally and interpreting them with a grain of salt. So the first finding that we see here is the graph to the left. Why do people choose flexible employment? Really, the top reason is flexible work hours. People in Malaysia, in the Grab and Food Panda sample, they chose the gig economy because it represents flexibility for them. And this is a very important finding because a lot of reports on the gig economy have this there's sort of debate going on whether the gig economy attracts people due to its flexibility, or is it more like a last resort employment for people that can't find traditional jobs. But if you look at this graph here, especially for Malaysia, can't find traditional jobs is really just 14% of the sample. The China results are slightly different, which you will see in the next slide. We also asked people what their major concern about flexible employment is. And uncertainty of income tops the chart, followed by lack of additional benefits. And this makes a lot of sense, right? Even though you might be someone who's a full-time gig worker, the fact that you're not being paid a monthly salary still means that your income flows, you don't have full control over your income flows. And so that could be a deterrent to living a fully well-rounded financial life. And if you notice, lack of additional benefits was a concern for only 16% of the sample. And that makes sense because if income flow itself is a primary problem, then you're not going to worry about benefits, which really will manifest sometime into the future. So it takes a backseat there. So to compare two samples, I'm showing the Fast Jobs Malaysia sample here, where also we saw that people prized the flexibility in the gig economy as a reason for them to join the gig economy, followed by additional income. But China is the opposite. In China, we saw that people chose the gig economy out of necessity. 41% of the sample, they thought traditional jobs were hard to find, and so they chose the gig economy. The Chinese context is very different. In China, public employment is very valued. Culturally, people feel that if you're in a traditional job, then that is valuable. And so culturally, the responses to these survey questions reflect cultural influences. So that's probably what's going on here in the China sample. And of course, unemployment is a factor. If I go back to the China slide, unemployment rate is slightly higher than it is in Malaysia. To proceed, the next major finding was, I just explained to you the different dimensions of financial health. So here is where we will see that play out. And don't be alarmed, I know a lot is going on in the slide, but I'll walk you through it. What we found was that most gig workers, more than 60% of them, if you include all of the samples, but here really also 60% if you add all bills and most bills. Most gig workers mention that they are able to meet daily commitments. So that speaks to financial security. That's the very first thing you see here. But they struggle with financial resilience and financial freedom. So financial resilience is this question here. We asked people if they would feel comfortable or if they would be comfortable dealing with RM is the Malaysian currency, RM 1,000 financial emergency. Oops, sorry. And that tantamounts to about $250 US, or in Indian currency, around 15,000 Indian rupees. And only 20% said they would be comfortable. And 35% said they would not be able to deal with it. In terms of financial freedom, we asked people if their income allows them to do things they enjoy, and only 13% said most of the time, whereas the rest fall into the sometimes, rarely, or never category. And that makes sense, right? Like, if, like I mentioned before, you might be financially secure and just getting by, but that does not necessarily mean that you are financially free. A lot of these people, and if you look at the right side of this graph, we have a few core variables there. And the tick marks denote the fact that these variables predict the outcomes on the left, and that they are statistically significant. So you see a lot of things going on here. For example, for financial security, we see age is a factor, we see education is a factor, marital status. But what I would like to highlight is that we had these three behaviors listed in our survey: prudent spending, frequent savings, and financial planning. They seem to predict all financial health outcomes, particularly savings. So here we are not necessarily talking about the amount of savings, but rather the frequency of savings, the habit of saving. So it does not, I mean, of course, the level of savings matters to some degree, but we noticed that even among people who had very low income to begin with and consequently low savings, those that have a frequent savings habit tended to be more financially resilient, and of course also financially secure. So savings and financial planning tend to be significant predictors of good financial health outcomes. A little note on savings. So UNCDF is supporting this organization called POD, which is a micro savings app based out of Malaysia. And POD enables savings towards goals. So we asked in a different survey with POD users and non-POD users on the GoGet platform. We asked them how comfortable they were dealing with the same question on financial resilience, and we saw that POD users were more comfortable. And here we have controlled for income and some other core variables. And if you look at this graph here, among people who say that they save very often, about 68.5% also said that they would be comfortable dealing with a financial emergency, whereas only 20% said so among those that save sometimes or never save. So really, regardless of how much money you're putting aside, just the habit of savings, which consequently will lead to increased level of savings, really matters when it comes to being financially resilient. And financial resilience is a very important concept, and it's really relevant now because we're living in the midst of a pandemic where this ability is being tested. And therefore, this research is very important because it brings out some of the pathways to realize financial resilience, and savings is one of them. The other major finding is related to borrowing. We noticed that about half of the gig workers had borrowed in the past 12 months. And we asked them who they borrowed from and what did they borrow money for. If you notice, 3/4 of the sample said they borrowed from family and friends, and you see banks come a distant second. And if you look at what they borrowed money for, you notice that essential and emergency expenses really are the top reasons. And that's pretty concerning because what this indicates is that they lack cash in hand, number one. Number two, it indicates that they are using borrowing to smooth their consumption, when actually savings is a better instrument to use to smooth your consumption. And what do I mean by smoothing consumption? Smoothing consumption is a concept that refers to spreading out your expenses in the face of unstable income. So let's say today you get X amount, but you don't get this amount for the next 3 months. but you have expenses for the next 3 months. You have bills, you have education fees to pay. So the X amount that you receive today has to be smoothened for the next 3 months. And generally, if you're financially healthy, you will use savings to do that, especially if they are essential expenses. But if you're borrowing, then it's an indication that a lot more can be done there to improve your financial health. And in the gig economy, this makes a lot of sense because people's income varies. We have some more findings on income instability, which I have not included here. In a bid to not make this super complex, but we did notice a significant monthly variation for about half of the sample in Grab and Food Panda in the sample that I'm showing. One thing I would like to note before I go forward is that, the gig economy is definitely not a bad thing, right? I mean, this is not about is the gig economy a good thing or a bad thing. I don't see that as an either or narrative because, the gig economy has created opportunities that did not exist before. In India, in particular, where youth unemployment is increasing, a lot of young people are taking to the gig economy. And they also find the gig economy very helpful because it's flexible. So it gives them the opportunity to cater to other aspects of their lives. And that could mean anything from maybe they're attending to a business or they're studying or they have elders to take care of. Women also increasingly choose the gig economy. So the gig economy includes people or segments that the traditional economy could leave out, such as students, such as women that are taking care of children. And the gig economy also helps people earn income, right? So it is a great innovative technological model, but a lot can be done to improve the financial health of workers in the gig economy. So this slide is about financial products and services, the usage of these financial products and services. So you see a bunch of financial products that we have listed on here. And we asked people if they use these products. So you notice how savings accounts are, across the board, they are used by people, nearly 94% here. Debit cards also about 50 to 60% of the sample. E-wallets less so. And then you can see how other more sophisticated products such as insurance, loans, credit cards, investment products are not used as much. What this slide does is it shows you the usage of these products by two parameters. One is educational attainment and the other is gross annual income. So if we look at educational attainment, you will notice that usage of more complicated products is associated with higher education. So tertiary education is indicated by this light green color, and you see how it really dominates in most of these sort of complicated products. Whereas savings, you see people of all education levels pretty much tend to use it. And if we turn to gross annual income, you will also notice here the differences are pretty stark. People with higher than RM 60,000, which let me see if I can put my math skills to the test and do a quick, that would be about 4,000. Okay, never mind. So that is the high income group. You could also say middle income in Malaysia. And people with this income bracket tend to use more complicated products. And you see the difference is really stark for investment products, for credit cards, for loans, and also for insurance, EPF as well. But you don't really see it for savings accounts and debit cards. So what this is telling us is that some first level financial services are used across the board probably because they're easy to use. And more sophisticated products are correlated with education, attainment, and income. So that's a pretty significant finding. The last finding is related to COVID-19. So we asked a couple of questions, but I've included two here. One, how did you respond to your financial situation due to COVID? And two, what changes will you make after COVID-19 to your financial life? And if you look at the first one, people used savings to cope with COVID-19, which is an indication of, I would say, good financial health, because ultimately the goal of savings is to, especially short-term savings, is to smoothen consumption and to attend to emergencies. So this is a pretty good finding. And also just to note, these questions were multiple choice, so people could choose more than one option, which is why you see that they don't really line up to 100%. So this also means that people might have tried a combination of coping mechanisms and not just relied on one. The second two sort of, they tie are managing your expenses, cutting down on your expenses. And we divided that into essential and non-essential and left it to people to interpret that. And we see that people cut down on both essential and non-essential expenses. And then receiving aid from government, about a third of the sample, which is significant. People borrowed from family and friends. A smaller percentage took on more jobs, and that makes sense because COVID-19 induced lockdowns obviously reduced demand for some of these on-demand services. However, the on-demand gig economy was quite active in Malaysia, undertaking food delivery and other kinds of delivery. But of course, the ride-hailing industry was affected because people were not moving around. What financial changes will people make? The most chosen option was to take on more jobs. So people would, when this thing ends or subsides, even though it shows no signs of abating, people would like to take on more jobs and make good the income that they have lost. And then what's interesting is that people are choosing a string of financial behaviors that they would like to change, such as they would like to plan their finances better. They would like to spend within their means and really put money aside in savings, but planning really kind of comes out. And then some of these other behaviors, such as paying back debt faster, borrowing less, they are, not very popular financial changes in this sample. All right. Yeah. So are we good with time? Yeah. Okay. So in summary, flexibility, familiar responsibilities, and extra income are top reasons to join the gig economy. And these, the reasons why people choose to participate in the gig economy are very much tied to context, as I explained in the China sample. Cultural influences might play into people's choices, but income instability remains a concern for everybody. And that speaks to the nature of labor and income in the gig economy. I'm sorry, Amit, I think I can see you. I wonder if my screen is still visible.
Yeah, everything is visible, okay. Do not worry.
Okay, great. The second is that gig workers tend to be financially secure, but they struggle with financial resilience and financial freedom, which is elusive for most. The key finding was that the habit of savings, and notice that I call it the habit and not level of savings, influences all financial health outcomes. Gig workers mostly borrow to cover essential expenses or emergencies, and they borrow from family and friends mostly. In terms of financial products and services, savings accounts are ubiquitous, and to some extent, debit cards and insurance as well. Insurance more so in China. And that is very specific to Lionbridge because it's the truck driving industry where risks are quite substantial to truck drivers. So everybody is pretty much insured. But more sophisticated products are widely used by those with a higher income. So the last part of my presentation is where do we go from here? We're proposing a similar study in India. Before I delve into the details, with our Malaysia and China study, what has come out is that we have been able to support platforms, policymakers, and financial institutions through our findings to develop or improve products and services and policies for gig workers. One example of that, and it's currently ongoing, something that we're proud about, is that we've brought together 3 stakeholders, a government agency in Malaysia, a platform, and a FinTech to design a few interventions that could help gig workers develop the habit of savings. Now, one of the things that comes up with savings is that I don't have enough money to save. A lot of gig workers have told us this, in our qualitative interviews. And we want to really test that hypothesis out because we have noticed in our study here, but also in the fast job sample and in the China sample, that even among low-income gig workers, we do see people that are saving. And of course, they might be saving for a variety of reasons, but it is not entirely elusive just because your income is low. And we want to contribute to this this notion that we want to increasingly advocate, and that is that, it doesn't matter how much money you put aside. Like, you don't have to wait for your income to reach a certain level so that you can start saving. You can start saving today with just maybe 1 RM or 2 RM or even 5 RM if you can do it. And cultivate that habit, because a lot of studies have shown that when you create an environment where people start saving, even if it's a small amount, and then you remove that environment, you basically come out of that intervention, people still continue to save because they've got into the habit now. So it could be a very behavioral thing, which we're trying to test out. And so in India, we want to do something similar. Our ultimate objective is to support a range of stakeholders, because obviously this is a concerted effort, platforms, policymakers, financial institutions, in improving the financial health of gig workers. What will differentiate the India study from what I have presented is that this will look at the demand side, but also the supply side. In Malaysia and China, we focused mostly on the demand side. We wanted to understand the gig workers, their aspirations, their financial lives. And here too, we still want to. And so some of the research questions you see listed there are very similar to the research questions we had for Malaysia and China. But then we will include a supply side component where we will conduct expert interviews, qualitative interviews with platforms, policymakers, and financial institutions. We will try to understand what their challenges are and where they see opportunities. And then, triangulate all of this data to see what each stakeholder can do to improve the financial well-being of gig workers. Our report on Malaysia and China is due to come out next week. So please watch out for www.uncdf.org, where our publication will be posted. And if you would like to get in touch with us or work with us on this important topic, here is our email ID, financial.health@uncdf.org. Thank you very much for having me.